Hey everyone, welcome back to the channel. Today we're covering the latest action on SoFi Technologies, which has had quite the week. After delivering a blockbuster second quarter earnings report that sent shares soaring, the company followed up with a major stock offering that sent the price right back down. But now that the dust has started to settle, let's take a fresh look at what's really going on with the business, the stock, and the investor reaction. If you're holding shares, thinking about buying the dip, or just watching this company grow from the sidelines, this video will bring you up to speed with everything you need to know, and why the long-term story still looks incredibly bullish. Let's jump right in. On Tuesday, SoFi delivered one of its strongest earnings reports to date. The company reported $858 million in revenue for the second quarter of 2025, representing a 44% increase year-over-year. That beat Wall Street expectations by a wide margin. On the bottom line, adjusted earnings per share came in at 8 cents, beating the consensus estimate of 6 cents. More importantly, this marks another quarter of sustained profitability, something that investors in high-growth fintechs have been waiting to see. User growth was also impressive. SoFi added 850,000 new members during the quarter, pushing its total membership to 11.7 million, up 34% from this time last year. Product expansion played a huge role here, with more members using multiple services across lending, investing, banking, and budgeting. Loan originations totaled $8.8 billion for the quarter. That includes a 66% jump in personal loans, a 92% surge in home loans, and even a 35% rise in student loan activity, a category that had been under pressure in previous years. Fee-based revenue came in at a record $378 million, showing that SoFi isn't just growing its loan book, it's building a diversified ecosystem of financial services. That strong performance gave management the confidence to raise full-year guidance. The company now expects $3.375 billion in revenue for 2025, up from its previous range. Adjusted earnings per share are now projected to hit 31 cents, also above prior forecasts. Naturally, the stock responded well. Following the release, SoFi shares jumped as high as $25.08 in intraday trading on Tuesday. That was a gain of nearly 10% and put the stock at a new multi-month high. But just as quickly as it climbed, things took a sharp turn. Later that day, after the market closed, SoFi announced a $1.5 billion public offering of common stock. That news triggered an after-hours sell-off, with the share price falling back toward $21 by the end of the evening. The offering was priced at $20.85 per share, with approximately 71.9 million new shares hitting the market. Underwriters were also granted the option to purchase another 10.8 million shares. In total, this could lead to around 7% dilution of the existing share count, and that's what caused some of the knee-jerk selling. On Wednesday, SoFi opened near the offering price and traded in a fairly volatile range throughout the day. The stock dipped as low as $20.36, climbed back up to $22.34, and ultimately finished just slightly down on the day, effectively baking in the full impact of the dilution. Now here's the key point. While short-term traders reacted to the dilution, long-term investors are asking a more important question: what is the company going to do with that $1.5 billion? And here's where the bull case starts to build. This capital raise wasn't the result of a cash crunch. In fact, SoFi is already profitable and has access to deposits through its fully licensed banking operation. The decision to raise money now, right after a strong earnings beat and a surge in share price, appears strategic. By raising funds at a relatively high valuation, SoFi can bolster its balance sheet, fund continued product innovation, expand its lending capacity, and potentially even pursue acquisitions. In other words, this wasn't a distress move, this was a growth move. Yes, the dilution stings in the short term. But if the capital raised allows SoFi to grow faster, acquire more users, and expand margins, then the earnings base grows too, and over time, the pie gets bigger for everyone. So what does this mean for the stock going forward? Well, from a technical standpoint, the market has already priced in the offering. The shares are holding above the issue price, which is usually a good sign. If investor sentiment had truly turned negative, we'd likely see a drop below $20, and that hasn't happened. On the fundamental side, the story is as strong as ever. This is a company growing revenue at over 40% a year, scaling its membership base rapidly, and transitioning into a full-stack digital financial institution. Thanks to its bank charter, SoFi can fund loans at a lower cost than many of its fintech competitors. That's a huge competitive advantage, especially in a high interest rate environment. And with brand loyalty growing among younger consumers, SoFi is building a powerful platform that could serve millions of users for decades to come. Looking at valuation, even with the recent run-up, the company is still trading well below its all-time highs. And while it's not dirt cheap, investors are increasingly willing to pay a premium for profitable growth, especially in a space that's historically been filled with cash-burning startups. It's worth noting that analysts are still largely bullish on the stock. Several firms reiterated or raised their price targets after earnings, citing the strong guidance and underlying momentum. And despite the dilution, they continue to see SoFi as one of the most compelling names in Fintech. So, to sum it all up, the stock exploded higher after strong earnings, gave back those gains on a surprise equity offering, and is now stabilizing as investors digest both sides of the story. The short-term pain from dilution is real, but so is the long-term potential. If you believe in the future of digital banking, if you see value in a vertically integrated financial ecosystem, and if you're bullish on a younger generation building wealth through mobile-first platforms, SoFi is a name worth watching and potentially owning. Let me know what you think in the comments. Are you buying this dip, holding through the noise, or waiting for a better entry point? If you found this breakdown helpful, hit that like button and subscribe to the channel for more stock market updates and long-term investing content. Thanks for watching, and I'll see you in the next one.